how to make your gold stack bigger than mine. There are many pitfalls, many ways to lose, obstacles that slow us down as we build our stack of gold. In the next 3 minutes, I'll show you how to make your stack of gold bigger than mine. Let's do this in 3 minutes, and away we go. We all got into this game with the same goal. Every one of us. Stop lying to yourself. Nobody, not one person ever bought a full ounce of gold and said, that's all I need. Just 1 ounce. I'm done. No, we all have something terribly wrong with us. We are driven to collect, driven to hoard, driven to stack as much gold as we can get our hands on. And we all, every single one of us, we all want to reach a point where we look at this stack of gold that I'm showing you on your screen. We look at that and we feel pride. Yes, this is mine, but everyone, we still think that's not enough. I want more. I want to double that. We all have that in us. Let's put some strategies in place to get you to that goal. Stay away from the overpriced, pretty shiny, breathtaking, semi-numismatic gold that I'm showing you on your screen. That is the first step. It's expensive gold. That is so terribly expensive this is so expensive that I need to keep these coins encapsulated. If you've been watching my channel, then you know I love to hold my gold in my hand, but these coins are so expensive that I need to keep them encapsulated. Stay far away and only stick to American Gold Eagles. They're the most liquid and the coin that comes with the lowest premium. The next strategy, speaking of low premiums, is to buy gold bars because they come with a premium that can be literally 1/4 of the price of the premiums we pay for American Gold Eagles. The problem is that we all, for some strange human reason, we all prefer to buy gold in the form of coins. We just are not thrilled about gold bars. Again, the topic of this video is not how to be thrilled about your gold stack. The topic is how to build a gold stack that is bigger than mine. Clearly, I've spent way too much. I've wasted way too much money on these expensive coins. And if you can stay focused and be diligent, you'll already be ahead of me. Please leave me a comment and let me know if this rings true for you. I'm eager to hear your experience. I truly learn more from you than you from me. Long-term performance lag, the greatest struggle for gold. And in my experience, this is the elephant in the room that no one talks about. Yes, the silver to gold ratio is important. And of course, we should be buying generic silver rounds and bars. We should stack silver to eventually trade in for gold. That is a great strategy to build your gold stack, but gold has an inherent flaw. The gold market has always shown a long-term performance lag. This means that gold, just as we've seen this summer, gold will plateau. Yes, it is a volatile metal. Yes, the price of gold will shoot up and drop down at a moment's notice, but it will plateau and hover at a specific price for a long stretch of time, and that is commonly referred to as long-term performance lag. This lag is painful because during that stretch of time, our money could be growing in a more lucrative place. Sure, gold during the times of plateau, gold will be a safe store of wealth, but it will not grow during those long stretches. Just look at high-yield savings accounts. Your brick-and-mortar bank cannot compete with the rates offered through online banks. They can offer a 5% rate, and even that will beat the stagnant struggle of long-term performance lag that we see every year, year after year. We wait patiently for gold to jump up in price and get itself out of that lag. Take risks. We as a community, we are all quite conservative in our investing. We choose gold because it is a safe store of wealth and a hard asset that we can hold in our hands. The key word here is safe. If you've been watching my channel, then you know I do not put all of my investments into gold, silver, precious metals. I invest in stocks. I invest in real estate. I take risks, and that is a struggle for all of us in this community. Knowing when to jump in and take a risk. Real estate, even in the present bubble, is a risk, but it is a risk that offers much quicker and stronger profits compared to gold, and explain that in 3 minutes. I think this brings up the importance of diversifying. I came across something and it made me think of all the comments regarding stagnant values, and this got me excited. There are several reasons for this, mainly the timing aspect and the significant upside potential in my view. Traction Uranium. Their ticker is TRCTF. It's on your screen. I'm excited about this company because you've heard me talk about other natural resource opportunities, and I'm very impressed with this company. I want to thank Traction Uranium for sponsoring today's video. The last time TRCTF traded for 23 cents, as it does today, the stock actually doubled within 2 months. Doubled within 2 months. To understand the timing of this, we need to look at demand. In my opinion, success in investing is based upon how well one understands supply and demand, and Traction Uranium is doing this right, as I see it. Uranium is in a bull market, with prices doubling since the bottom and demand is skyrocketing. Renewable energy is on virtually every government agenda, but it is clear we need some sort of clean and efficient electricity source to segue to renewables. Many see this, and uranium is a heavily funded source. Countries around the world are funding new uranium reactors and production. That is a strong bull market. 20% of U.S. household electricity and heating is fueled by nuclear energy. We're the largest consumers of nuclear energy in the world when it comes to household electricity, but we only have one mine. Yes, one mine, that's it. Traction Uranium has a tight share structure. It has institutional shareholders, Sprott Capital, Canaccord Genuity, Research Capital. All told, institutional investors and high net worth individuals comprise 30% of the ownership stake. But the part I really like is that founders and strategic partners own an additional 55%. That is a tight structure. They have projects in the Athabasca Basin in Canada. They call it the Saudi Arabia of uranium. That's what they call it, the Saudi Arabia of uranium. That's why Canada, which is actually the world's second largest uranium producer, they're accounting for 13% of the total global uranium output. 13%. It's a primary jurisdiction to supply this demand for uranium. Traction's project is just 5 kilometers away from a world-class mill, and they are going to drill this project with a new technique that has already shown results. Analysis results have returned high-grade uranium mineralization at 0.93%. That's simple math for me. The demand is strong, the timing is now, and this company, Traction Uranium, has an experienced team with a unique drilling method. They are paving the way. You can tell I'm excited about this company. Timing. They're starting to drill soon. Another company in this Athabasca region, they reported a mega discovery and their stock went up 500% in 1 week. That's how you do it. Check out Traction Uranium. Their ticker's on the screen, TRCTF. Take the time for your due diligence. Check them out, and I think you're going to be as excited as I am. Hit subscribe. I post 3 videos per week. Hit subscribe. I don't want you to miss it. I'll see you in the next one.